What's up, traders? Anthony Crudelli here, and thank you for tuning in to the Futures Radio Show podcast. Make sure you click that like button and never miss a live stream by clicking the subscribe button right here on YouTube. Remember, today, halfway through today's show, we're going to be giving out $1,000 in prizes, and we will be taking your questions throughout the entire discussion. So we want you guys to be engaged. Please put your questions in the YouTube chat. Everyone is always asking me about the pit. What was it like? What's my favorite story? How did I and other traders transition from the pit to the screen? Well, today we have the founder of EdgeClear, Morad Askar, otherwise known as Futures Trader 71, Matt Pax Kenah, Earl Counter, joining me to discuss from the pits to the screen. This will be recorded and available on YouTube following today's discussion. It'll also be on iTunes, Spotify, and pretty much everywhere else you listen to your podcast. This podcast is sponsored by EdgeClear. EdgeClear was designed by traders for traders. They are a forward-thinking broker earning a reputation for unbeatable service. When you join EdgeClear, you'll be assigned a personal broker who will get you set up, assess your needs and costs, and will hopefully help you save. EdgeClear is offering Futures Radio listeners 69-cent commissions for most products and 20-cent commissions for the micro indices. Go to edgeclear.com. I got the link down below in YouTube, and click on open account at the top of the page and sign up with the code DELIEDGE. Without further ado, we've got the whole crew here. Pax, Earl, FT. What's up, everybody?
How you doing?
Hello,
guys,
everybody.
how you doing?
Earl, you look great.
You look great too. Everybody looks good. We haven't seen each other in a minute, but it's fun, and I love the background pictures. I love the badge. I guess I should have done a little more to prepare. Maybe I'll go throw my coat on. I think it's sitting up in the attic somewhere.
First thing I want to do is introduce Earl to the audience. Most of you that have been following the show obviously know Pax and know Futures Trader 71 Morad. Earl, give everybody a quick background on yourself.
Trading wise, I was a local market maker in the S&P pit, one of the larger pits in the world. I stood in there elbow to elbow. I don't know how they let me in, but I was in an area with some of the best traders I've ever seen in my life and some really memorable characters. So I was a market maker in the S&P for about 17 years. Was an early adopter to the arbitrage between the pit and the electronic. Deli, you were cutting edge on that too with what you were doing with Vince. And then eventually transitioned to doing well outside the pit, but couldn't quite keep up with the algos anymore. So had to reinvent myself as a trader as I came off the floor to off screen. And I'll tell one thing, Deli, I remember the first day you walked in the pit, and I love you. It's memorable, but not because of your trading. It was the hair.
Oh yeah.
First day, it was the memorable hair.
No, obviously it wasn't the trading at that time.
Not yet.
And at that time, actually Earl I actually was clerking looking at Earl. So I had to see him, and they can't tell how tall you are from this picture. How tall are you, Earl?
I'm 6'8". Yeah.
6'8". And it was literally like me standing in front, and then he's next to Vince, who was probably 6'4".
6'4".
And
yeah.
I couldn't, even when I was standing on the step right below them, I couldn't even see the brokers. All I could see was a big body in front of me. And that was one of the reasons why I had to go to the screen, because there was no way I was competing with those guys. Because that was our little corner, was us, Morty, Flem.
Yep.
And a lot of those guys are not trading electronically. But you guys that are here today are and have, and like you said, Earl, you were doing the ARB. Pax, did you actually do the ARB too? I don't remember if you did or not.
I don't even want to talk about it. No.
Yeah.
Earl was one of the first people doing it, and I refused. I had Mike Naples or Carmi standing in front of me, and I was still paying $1 a contract. I was doing 10,000 minis a day and paying $1 a contract just to get it filled, because I refused to do it like an idiot. Just a complete moron. But
we should talk about that just for a quick moment, just to understand what that really is. I mean, one of the things I'm going to put up today, everybody, as you're tuning in, I'm going to be putting in the topics, and we're going to be really segment based. And like I said, put your questions in. We want to get you engaged and ask us along the way. The transition from the pit to the screen was not like, hey, there's computer trading, go and trade it. I've talked about it a lot on how my journey was, but how the actual how it actually evolved was a combination of pit and screen trading. And so when we're talking about the ARB, what we're saying is that at the time, Earl would be in the pit and he'd be bidding and offering, and he'd be on a headset with somebody, and they would be executing minis to offset them. So obviously, however, if he did 50 bigs, the clerk would, or it would his partner, a lot of times it was partners, would just get out of 250 contracts. And that was it was an interesting time, because there was a time, and I'll actually ask you two guys and how this kind of evolved, is where the pit led the screen for a while, right? Mm-hmm. There was that transition, that time where it was like everybody had their squawk boxes on. What's Joey doing? What's Praz doing? What's Mark Veriano doing? And then it was all of a sudden everyone's staring at the screen. No one was even looking at the broker anymore. We'll start off with you, Pax, a little bit, because you didn't do the ARB. Talk about how that kind of transition occurred.
It was that I'll never forget. Do you remember the old Nasdaq pit? Before we expanded it, I think we expanded it in like '99 or maybe it was 2000. There were guys coming in from the yen and from all the euros that wanted to come into the Nasdaq, and it was right around the time that side by side trading really started to explode. So, when we expanded the pit, it was over, I think, Memorial Day weekend. We left Memorial Day weekend. It was a small pit. We came back, Tuesday, 200 people. I'll never, and we side by side trading. The pit still led. I'll never forget. It was a big trader then. I'll never forget putting my hands up, half bit, everybody else 60 bit, 70 bit. I realized, holy shit, this is what Praz feels. Even bid, everybody's 05 bit, 10 bit. So I got brokers, getting me out of stuff. It was a great feeling. What was a terrible feeling, though, and I felt like it was a great feeling because I felt like I was in control, not just of the market, but of myself. What switched when we were all staring at the screen, when the screen was leading, and I was way too late on that, was I was getting picked off. I'd be even offer. They'd be trading tens on the machine. I'd still be offering evens, yelling stupid, egotistical things like "Don't fade me," at 90, and then they're picking me off at 90, selling evens. Guys like Navinder Surejo and Nav and the Russian. Remember the famous Russian?
The Russian.
Yeah,
that's right.
And they were creaming me, and I just kept doing it. I just refused to give in and to make that switch. And when we can talk about it later, but when I finally did make that switch was when it was was already gone. So anyway, I loved it before because I felt like I was in control, not just of the market, not just of the market. We were in control of the market. We could uptick it and we'd paint the tape and we'd create momentum by buying the top and selling, buying them with the one line, that kind of thing. The squawk box guys would quote what I was doing, and it was a really cool feeling. And I felt in control. When things changed, I felt out of control. I didn't know how to regain control. I was getting divorced and all kinds of mayhem happening in my life, and things just continued to spiral. I wasn't smart enough to make the transition like you guys did.
Well, Earl, because you were on the headset and you saw it, I think one of the things I want you to talk about is Pax talked about it, basically just getting picked off. I mean, I think that was really, to me, where I started to see how the screen really had taken control. Is like where I would be on the headset with Vince or somebody, and I'd be like, he'd be going, Wallach would be like half on 100. He'd be like at even, and I'd be like, no, don't, because all of a sudden I'm just seeing the order book going right, through it, where I'm like, don't, because I'm like, I can't get out of these, Talk about when you started to see that and how you started to adjust.
Yeah, let me take a step back further. So I won't say you're an idiot, Pax, because there's also some political capital that goes with getting on the headset. So interestingly, for your viewers that know or maybe don't know, real quick, if we talk about the picture of a pit and the steps, right? So seniority, your brokers were in a big bull ring, we're at the top. And then you had the top step traders where you're more seasoned, much larger traders. They've been there a long time, had deep rooted relationships. It's a relationship and trust first business, right? And then you'd go a step lower, and those were your middle tier traders, and then a step down in the middle of the pit. And when you start out, you cannot get up. You have to wait for somebody to leave to try to fight your way into a spot to get there. And the reason you want to get there is you want to get to the faucet. You want to be close to the paper flow. So what had happened is my size immediately gave me an advantage to be up above the step. So my height kind of overwrote that seniority and that time frame. It helped, but I didn't have the relationships to trade with the brokers. So very early on, as I saw a little bit of success and finally almost figured out what the hell I was doing, I realized we were capped on some things. And in the very beginning, if you remember, they limited the size. They limited the size that you could do in the electronic market. So that kept the large local traders keeping their large positions like PAX in the pit, and then medium to little guys, maybe even like myself, could pick them off. You could see that rotate and move. And because I was trading that size contract, I was able to see it change very quickly on the S&P and take advantage of that arbitrage. And again, we're meeting, like Paxton said, he's even offering a pit and it goes half bid, or I think you said it, Billy. Yeah. There's 5 tick scalp there. So you can quickly grab that and minimize that. So eventually, though, the size came over, the side-by-side trading. There's a funny story there about when the side-by-side went down. We can get to that maybe a little later. But as the size grew and I got more comfortable with that, then I transitioned where I was really doing arbitrage or leading with my entries and then exiting on the screen. I began to start to enter more on the screen, and that became more and more. And like to Pax's idea, we were doing a massive amount of minis on the day. It would be very easy on a busy day to do 15 or 20,000, 25,000 minis because you were just offsetting it. You were taking that edge as often as you could and then running the momentum and then seeing what happened and then just choosing what was the better out, whether it was in the pit or on the screen. It just gave you 2 avenues to execute.
Earl, what was limiting? Was it your clearing firm limiting your size, or was that an exchange thing?
That was an exchange thing. In the very beginning, I think it started out, the most you could do was 6 minis at a time. You could do 100. And before people, I actually believe that's what led to a lot of the high frequency, like an if then loop. If you want to set in say 60 cars, you would get past it and you would send that order in as 10 6-slot orders, but you had to have some coding done to do that. The rest of the people would have to go in and have hotkeys and things like that mapped out. And you'd have to have a good clerk or a good partner to say, hey, sell 35. And they'd have to figure out how to break that down so they can get the order in. So there wasn't the speed of execution inherent with that because you still had some human execution trait on the electronic side. So they limited the size of the individual orders. You couldn't put 100 lot in. You'd have to put it in as 25 6 lots and some
that blows me away, having started on the screens.
I'm going to tell you why where I believe that initially happened, because I was there as the screens initially came out, and when I first started to trade on the screens, I could put in unlimited. There was no risk parameters, right? Mm-hmm. And I could see the entire book. And if you remember, I'm not sure who it was. But that's where I think we started to get the fat fingers. And you remember we would look at the minis and everyone being going, whoa, what was that? And a lot of times I would have orders be working and I'd be walking around the pit. And a couple of times I would get filled and then they busted them. Remember when they were busting trades? They were busting electronic trades because we got too far outside of what the pit was. So then they started to restrict it.
And what would happen if they busted a trade? You sold 10s on the machine and you covered them at even. They didn't bust.
You're long now. You're long
right
now. Yeah, it happened to me multiple times. Yeah. That's why eventually what they had to do was they started to limit it, and then eventually they increased the limit, right? I don't know what the limit is these days. More, was it 2,500 at a crack for S&P? I think that's what it is.
It might be there. I haven't traded that big in a long time.
Where the most you could put in at one time is 2,500.
I believe it's 1,500.
It's only 1,500
per click. Yes,
per click. Okay, so they obviously found that medium, but that was, you're right, Earl. That's where like those black box, like Daiso, who I was basically standing right next to him, and that's why they would be sitting there doing that when that started to change. But initially, it was we were on, I forget what was it called right now. It was that French company GL? Was it GL? GL Win? I can't remember what it was right now. It slips my mind, but I mean, it was on it forever. But that was where we don't have the domes like you see behind PAX. No. We were just a side by side. Remember, we only had that little computer screen in the corner by the CQG machine. That's where I would trade it. So I think that is obviously, I mean, like when we talk about the transition, it took time. I mean, I still can't believe that initially when electronic trading was started, that I didn't even have any risk limits on my account. I mean, I could have been sitting there clicking. I could have been short 500 minis on there by the time, Frank Madden would have been hunting me down. But, we became really close friends really early on. But that's how that was. And that's why all those different rules and things changed, because nobody really thought about all of that stuff. Because you remember in the pit, you could do as many as you wanted. They couldn't stop you from buying 100. You can't go out
there.
there.
It was in your pocket. They wouldn't know. You'd see it on a busy day. They'd start to send the people around. You'd start to see the Frank from the clearing firm.
Exactly.
They would just come down, and they could tell by the amount of sweat and anguish on your face. You're like, this guy's probably a little overexposed. It's funny too when you look at that. I remember the first day we went up into a limit. We had one of those massive limit down days, and we were really heavily into the arb at that time and trading it. So we're pounding bids as fast as we can as the market's breaking in the pit, and then as it's stopping and accelerating, we're covering that in the minis. So effectively, from a risk standpoint, I've got a lot of sells in my pocket on the card, and then I have this increasing naked long position, that the back office is seeing in the minis. So we're down. I don't even know what. It's like it's one of these 600-700 point days when that used to matter in the Dow. 80 or 90 points down in the S&P. And what had happened is my guy Grummer, you remember Grum? He was on the phone, and I saw him, buy 500, and he said, I can't. It won't take the order. And I said, you gotta be fucking kidding me. What's going on here? I said, buy 500. And then, of course, we want to make sure he wasn't doubling up. And what had happened was we had hit this arbitrary one side limit. We had net 10,000 long minis purchased. And that wasn't even a function of money in the account. That was just some number. Somebody said, 10,000 is a lot. If anybody hits that, we'll hit it. So we actually had to go. He ran down and they changed it and they opened that limit up, and we had to figure that out. But yeah, this didn't happen overnight. The things that are happening now that people have, the tools that they have, all developed over the course of 10, 15 years. It's like this 10-year overnight success sort of story for how the markets work now and the different people that are out there.
I got to ask you a question. What was a big losing day for you, Earl, doing that? I mean, are we talking huge hundreds and hundreds of thousands of dollars?
No. I'm not that exciting as a trader. I always was approached it more. It's a great question, Morad. I always approached it more as a base hit kind of guy. I was never a swing for the fences. As a matter of fact, when I first started down, I started in the Eurodollar options pit as an ARB clerk. And I don't know how those guys could stomach that. Like I used to see their vol sheets, and when things would change, like on an unemployment Friday, I would see these massive multi-million-dollar swings in their positions. And because I was executing their futures and their spreads, I liked that idea of go home flat every day, win or lose, know what you did. So I always had a target in mind, both for the upside and the downside. Now, that isn't to say there weren't some large numbers. I think in general, my largest losing day, which was in part outtrade as well, was about $150,000. But usually it was much, much tighter. Hit this number, be done. Unless there's a massive change, hit this number down and be done. I try to approach it with that really, really fiercely tight discipline.
How much time did you guys spend on any given day? We could sit in front of the screen these days and be here from 6 a.m. Chicago time till 4 p.m. just like wearing ourselves out. You guys in the pit, all three of you, what was a typical day like? Like, how active were you? Did you just trade the first hour, the first couple of hours and just walk off? Or were you there in the pit all day long? What did that seem like?
In the beginning, as you're learning, you're just trying to scream out, buy one, sell one. You kind of want to stay there bell to bell all day to learn and to see that ebb and flow of the market. And ultimately, you're looking for that space to try to move up in the spot to maybe trade with a broker and start that process. Over time, I realized in keeping a log of when I was most active, and we just used to start to break it down by you used to have a bell that would go off every 15 minutes. It was a bracket, right? And you had to have your punch cards in at a time. So we would go and sit down after a morning trade in the Merc Club and look at it. And I would start to notice patterns. And I would see that, yes, this first bracket, second bracket, third bracket, maybe up to the sixth bracket, about an hour, and a half, I was pretty effective and had more winners than losers. And I noticed the pattern where I would start to see more losers that late midday and certainly lunchtime trade. So over time, we just eliminated the process. And I realized I was a much more effective first hour and a half trader. Over time, it changed again, and we got some more on the cash close. So I would come back for the cash close, but I definitely like to stay away during the middle of the day. I'm a firm believer in mental capital, and that is a real danger switching from the pit. The pit was nasty. It was fun. It was incredible and electric to be there, but it was a mosh pit. It was a bullfight. So you would physically get exhausted. I mean, you'd be tired. You didn't have water bottles and that stuff back then. You'd be in there and you couldn't move. You didn't want to move because you were elbow to elbow pushing, shoving people. You were fighting for your real estate. So you didn't want to leave it. But at some point you would get physically tired and have to take a break, maybe run and get water, go get lunch, or go to the bathroom, and you'd be forced to get out of there. And that would
amazing how consistent. Yeah, amazing how consistent what you just said is with the screen for everybody. You know, like if you find yourself trading in the middle of the day, this time of day here, until, 2 o'clock Central, 3 o'clock Eastern, you look at people's statistics, and I've looked at hundreds of people's statistics, they always take a dip in their P&L if they trade through that period, and you have the exact same experience. So lots of activity in the first hour and a half, maybe 2 hours, then not much, and then people come back for the close. And that was from the pit to the screen, same rules, basically.
Yeah. How about you, Pax? What'd you see?
What's that?
I was curious, Pax, too. You're absolutely right. I was wondering, Pax, so you used to be there longer, or were you more a morning or afternoon trade?
No, I'd come in, I was downtown every morning at 6, no later than 6 o'clock. And, I did the same basic routine as I do now in the morning. And I always made a plan. I knew that I knew that I would I traded much the same way. From the opening range, I would trade the opening range to, a target. And so I would adjust my targets in the morning. But no, it's the same thing, between the open and maybe Europe's close. If I was in the pit after Europe's close, I was losing money. I was down.
You're down. Yeah.
I'd come back for the last half an hour to adjust whatever. But I would take positions regularly. So I would leave with the position overnight. It might be a swing positions, not time wise, but price wise. If I remove my risk and I paid for the trade and I've made, if I had a decent lead on the position, I would keep it. So I would come back in the afternoon for the last hour, the last 45 minutes to either unwind my positions or to increase them or just to adjust them. And then like you, I sat out. I was always around. I was at the Merck Club. I was in my office. I was working out. I was never far away from the pit. So if something happened, I wanted to be there. But it was more about price to me than it was time.
Yep.
But like in the middle of the day, there was really nothing going on. So if I'm going to sit there and I'm going to trade price and trade these price levels in the middle of the day, I'm going to wind up with the position on that I did not intend. Now, when I was trading, when I was at my best on the floor, it's when I traded my prices. That's it. When I was at my worst, as things were kind of unwinding in my marriage and also in when things were shifting to the screens primarily, like 02, 03, I started to trade a lot more every tick. Trying to trade every 10, 15, 20 points.
Yeah.
Earlier, you said something that I thought was interesting too about the arbitrage, trading evens versus tens. In the pit, when we were busy in the Nasdaq, I didn't care so much about the price. I cared about the level.
That's right.
So it would be even bid on 50. I turn around, sold. The brokers would be, I'm out. 90 on 50, sold. I didn't care about the 10 points they did. I cared about the 50 contracts.
Right.
So when the mechanism had changed and the screens were leading, I thought much the same way. I deluded myself to think, well, fuck it. Screw it. I don't care about so much about the evens or tens. I care about the 50. So let those guys, and I would say that, let those guys, make the arb. I'm going to sell these. I'm selling these evens. I'll buy them back the lower even. And then when the ranges started to contract, that no longer worked.
Yeah,
it was the guys that were doing the arb that were making the money, and I was getting destroyed.
I want to mention something real quick that I think is extremely important. For me, the sound really dictated a lot of what I was doing because I was on the screen looking in. And because I wasn't in the pit like you guys were, I was obviously in there for years, but then when I started going completely electronic, I was trading around the pit. And if there was no noise, I'm getting crushed. When it was loud, no matter kind of what was going on, I was doing okay. And I think that's really, where the squawk, was really helpful early on, things like that. Morad, I know that, I think that you listened to it as well. I'm pretty sure.
Lots of squawk.
When it was loud, that to me was the time where I would make sure I was there. Because I would just know when to take a break was when I would, all of a sudden you're sitting there looking around, like basically when Kenny Glick came in, right, Earl?
That's right.
Remember when Kenny Glick, it's just so funny. I think this is also important for people to realize that, like, I think it really kind of depends on what kind of a trader you want to be. I mean, we know a guy named Kenny Glick who was in there who we're all leaving, and I see it gets quiet. He comes in and he's, and he's trading pretty big, and he's just sitting there doing extremely well during the absolute worst time of the day for me, but he's making money.
That's right.
And it really, I remember looking at Kenny and being like, I don't understand. How does he do this in here? But it comes down to style, and it comes down to really, I think, knowing what it is or what environments or what type of markets are working well for you to be there. Because majority of us, obviously the four of us in here, especially in those times, were really, really short-term traders that we wanted to have the action. If there wasn't a lot of volatility, most likely we're going to overtrade. But guys like Kenny could sit there and he would look at it and I don't know, whatever it is that he did, and be able to take advantage of a slower market and size up in it because he felt that that's where he had the most control.
That's right. It's real important, whether you're on the screen or in the pit, know yourself, right? We all could be great athletes, but it depends if you're playing football. Are you a quarterback or are you a defensive end? It's a different approach to the game, different mindset. Same game, but there's different ways to slice it.
I'm going to quickly change topics here. We're going to spend a few minutes on it. And then remember, everybody, halfway through today's show, we're giving away $1,000 in prizes. And today, Morad, real quick, tell everybody before we get to that, I'm going to pull up one while I'm pulling it up, what we're going to be giving away today.
EdgeClear is giving away 5 of these 4K ultra high definition Logitech cameras. They're the best of their kind. We're going to be picking 5 winners. But because of circumstances and people might not get emails or whatever, we'll pick 5 more runners up. So we're going to run the picker wheel 10 times today. The first 5 picked will be contacted, and then we'll have 5 reserves. And you have 2 weeks to claim your prize. Once the 2 weeks are up and we don't hear back from you, it goes to the next person in the list. Okay, so make sure you're responsive.
Okay, so we're going to do this one quick topic, and then we're going to take that break, and we're going to spin the wheel. So if more you want to get the wheel ready, we'll do that. But this is one thing before we do that, and I think that I'm very interested to hear what these guys say from this. If you could take one thing, Pax, we'll start with you, that you learned from the pit, that you used in the pit, that in your transition you use on the screen.
Well, I guess the obvious answer would be the opening range, right? So adapting the opening range that I traded the same opening range, 30-second, price. I didn't get long right out of it. I mean, it was that price range that I used as my pivot, so that I knew objectively what the market was doing on that day, and I would use that. So, I mean, I had to learn how to adapt that. Something that I was taught early on in my career to trade from. I learned how to adapt that to the screens. The most difficult part of that transition for me onto the screens was learning how to size up, size down, and not to trade. Go big, go small, not at all, as you say. That was absolutely the most important thing on the floor. Sizing up for me was a function of again, when I was at my best, was a function of what the paper was doing. If the paper was, if Goldman, was coming in and doing 1,000 lots, well, I felt more comfortable trading bigger size. Same thing with the other houses. On the screens, I'm just clicking away, and all of a sudden I got 100, 200 on, 500 on. What in the hell am I doing to myself? I had to learn how to go from being a big trader to a one-lot trader again, and then rebuild. So I think using the opening range and then learning how to size up, using the noise. Like you had indicated earlier, you knew that, if it was noisy, you knew that you can be more active in the market. So I think using the opening range, which I still use every day, and learning how to size up and down. I think those were the 2 big things that I had to learn on the screens.
Earl?
I would say one we already covered, right? Trade your times that work well for you. That was good. But I think the important thing was trade within your limits, right? Know your size, know what your risk reward is. That never changes, right? It's money management. What am I risking? What's the reward? What's my expectancy on this trade? So the idea being, the old adage, right about the time you've got a good trade on, it's running, and you think, oh my gosh, this one's going to the moon. Guess what? Get rid of half your position, because it's that comfort and that, complacency that's probably going to bite you in the ass. So it's keeping your so in theory, keep your expectations in line with what the market's doing. It's great to have a trading plan that says, oh, I want to buy it here and I want to look for this 12-to-1 risk reward. And I'm hoping to buy this and risk 5 handles, but make 700 handles. But if the market's only ranging 100 handles a day, what are the odds? What are the probabilities of doing that?
That's a great line, Earl. That's worthy of being written down.
I don't know what I said.
One of the things I will say about Earl, and I know this because I was there when you were, early on in your career, you were one of the most disciplined traders right out of the gates. I just think a quick question before we get to, we go and spin the wheel and see who the winners are. How did you come to the pit with that discipline?
I didn't have a choice. So when I got started out, a lot of guys come in, they have a friend or their uncle or their brother. I got picked up by a group called Singer Winger. And what they did is they went out and they got, what they thought was a prototype. They got college working student athletes. They wanted big, tall guys.
They did. I was going to say they were.
What are you going to say, Anthony?
I was going to say, what was the shortest guy in that group, Earl? I don't think I made the cut.
The shortest guy in the group was John Gieselman, the quarterback from Michigan State. And he was 6'2", but he told Norm every time he was 6'4".
Yeah.
So,
it was 6'4".
I like it.
I tried to get on with them, and I was too short. I was 6'3". He's like, yeah, too short.
I was going to say they started with a 7-foot guy, and they worked themselves down to Earl.
I know. They had Reggie.
So because I got started and back that way, the funny story is they put $10,000 in my account. They said, here you go, lose it and go home. So I didn't really, given that fear of money and or respect of that money, I had to treat it small and had to treat it with respect. And Norm's idea was always a scratch is a winner. A scratch is a winner. A scratch is a winner. So preserve your capital, keep your powder dry. If it's going against you, get out immediately. There's always more trade. And that part's actually never been more true than on the electronic. It's very easy to trick yourself into staying long. You can see the bigger rotations and all of a sudden your scalp becomes an investment, right? Cut your losses short, get out. You can always get back in. But I had a very small starting capital, and I had to protect that. I had to keep my powder dry.
Great stuff, guys. We're gonna take a real quick break, and we're gonna spin the wheel and see who the winners are. A lot more to talk about in this discussion. Make sure you put your questions in chat. I see some of them. We'll be right back.
Streamline your trading setup with Edge Clear, the forward-thinking broker for active traders. From our unbeatable service with an assigned broker to Edge Pro X, our robust and reliable trading platform, Edge Clear offers more than transparent fees and fair prices. Designed by traders for traders, we combine the best of technology, service, and risk control. Our dedicated brokers are here to help you grow. Join Edge Clear today and elevate your trading business.
All right, everybody. We're back. Morad, are you ready to spin the wheel?
Born ready, man. Born ready. All right, let me see which screen it is. Let's see how the software works here. There it is.
Okay.
It's
Look how many people. A lot of people on there.
It's a time talk about fighting for real estate, like Earl was saying.
I'm rooting for Jerome Powell. Remember, he sent us a message on Twitter. He goes, "I'm in as Jerome Powell." I thought that was hilarious.
I love it.
All right, so we're gonna pick 5. Those are the winners, and then we'll pick 5 runners up. Each time one is picked by the wheel, they get removed. Therefore, the chances for everybody else are better. Akos, first winner. So we're going to hide Akos from the wheel.
As he's spinning the wheel, like I say, I see the questions coming in. We got a lot of really good questions, everybody. I'll get to them.
Trade Topher. Second winner. We'll spin this as quickly as we can. Rennie.
Hey, all right, Corinne.
Oh, you know this person? Awesome.
Oh, yeah, she's a trader in my group.
That's awesome.
I love it.
Oh, Corinne won? Nice.
Yeah.
Corinne. And this will be our 5th winner. Remember, there are 5 prizes worth about $1,000.
It's awesome.
and Ralph P. And then these are the runners up. These are the reserves, so to speak.
To get everybody thinking about what we're going to be talking about next, the next thing I want to talk about is your guys' thoughts on Algos and HFTs and how much of an impact they've had. I think that'll be an interesting conversation.
King of the Dow.
That guy's got to change his name.
Bad days must really hurt. Blue Eye. And then we got 3 more. Sam. And we've set the wheel to it must go through 5 rotations. We'll reduce that for the next show. We want to stir it up as good as we can.
Talk about from pit to screen. It's even good to see how midday gift grabs have changed. We're all electronic here. It's a long way from a bag of 20s, huh, Deli?
Yeah.
Oh, man.
It should be like a physical wheel that I spin.
You know,
right.
It's so funny you talk about the bag of 20s. I did that at our club with all the golfers, and everybody loved it. Now we did it for, I think I did it for the Super Bowl was the last time I did it. They're like, why am I putting $20 in this bag? I'm like, listen,
let's see when you win.
Yeah, it's gonna be fun. Next thing you know, everyone's going, let's do $100 bag. I'm like, yeah, oh, okay.
Hey, I ran into our friend. All of us will know him that ran the $1 million square pool for
JoJo.
Super Bowl.
Oh, JoJo, yeah.
Saw him last week.
A good guy. Love JoJo.
Like somebody I haven't seen him in 10 years. What's up, Matt? How's Jen? Like I saw him yesterday.
I know. Well, that's really the brotherhood from there, you know. And the next topic I want to talk about is thoughts on Algos and HFTs, because as we're talking about the transition from pit to screen, one of the things that Earl brought up, which I think is extremely important in this conversation, is real estate, right? I mean, everybody talks about how the Algos and the HFTs, they're faster, they're this or that. Look, I am somebody who had to go to the screen because I couldn't even trade in the pit. And because I didn't have the real estate to get to the top broker. Earl talked about that, and you know how tall he was and how good he was in there, and he struggled with it. There's always going to be somebody bigger that's got more money and faster. So I've never really had any issues with Algos and HFTs. They don't bother me at all. I do what I do. They do what they do. You know, you learn to deal with it. You know, actually, let's start with you, Morad, a little bit on this one, and we'll work our way backwards a little bit. I mean, you've seen it from the beginning till now, and as long as I've known you, you're not changing your strategy. You're not changing anything because of the Algos and HFTs. What are your thoughts on them?
I think you start to get in there. I mean, when I started out as a high volume screen scalper, it was, you know, sometime in the middle of 2005, CME changed some rules a little bit. They started hiding the counterparty on XTrader Pro. And they started to take away a lot of the stuff. They started to break off trades. So 1,000 lot would hit the bid and you'd see 1,000 print red. And you could see like, oh, somebody has intent. Now 1,000 lot hits the bid and it's like a bunch of 20 lots and 5 lots and 1 lots that add up to 1,000. So you lost that. So 2005, I went from making really good money to really having to squeeze. So I had to move to a higher time frame. And as soon as I did, the first thing I noticed is just like you, the impact of the fight, because I was basically a market maker. These guys, the huge volume, but I did, you know, I was trading around 6,000 sides per day. Most of my group did about 15 to 2,000 sides per day, each trader. And once you move to a higher time frame, it doesn't really matter because those systems kind of kick in for a very short, they're squeezing for a very short amount, right? And so I don't really care about what an algo does. I mean, a lot of times, often like today's one of those days, I'm down today because it seems to want to do something and then all of a sudden it's being run, you know, 5-6 points and then it comes right back to where you entered. And it's one of these days where you can get easily caught up and emotional. And I see a lot of algo type action in there, but in general, they don't bother me. I worked on some trading systems, just as a side note. I worked on some trading systems in 2011 and 12 for a group, and I got to see how these things work. I mean, the idea is human, but the execution, because it has to be done a certain way, happens algorithmically, and the exchange reports that as a computer trading. So the exchange doesn't really know if it's an HFT algo or if it's an execution algo or what. They just know that it's not a person clicking. But a lot of the ideas came from people, but the execution was very interesting because it would actually load up the offers and let you nibble a little bit and then pull and then just, push people out. So they had these smart algos and stuff, and that really kind of gave me an insider look where I was like, wow, I have no chance against these things in that small time frame. So you kind of have to step away from that, scalpy, every second, every tick matters kind of state of mind. It's very exhausting.
Yeah, and you know what, I will say that the CFTC has come a really long way and really stopping a lot of that. I mean, I've spoken with a lot of people over the years about that. They've done an amazing job at getting rid of a lot of those bad behaviors. But I just keep going back to it. For me, it's never been of my concern what someone else is doing. I definitely did notice as somebody who was trading, I was scalping 100 lots every day for years, and and at some point they were just chewing me up. So I had to change my strategy. But ultimately, I believe that even from that point, I've had to change my strategy because markets are different, and not just necessarily because of Algos or HFTs, but just environments change. So I've always looked at it like, yeah, they're there. And if you're going to be really, really super, super short term, that's who you're competing with. And they've got deeper pockets and they're just going to be better at it than you. As a day trader like myself who doesn't want to scalp anymore, I don't notice it at all. And, it's one thing is like, I love when they're running them for me, and I hate them when they're running them against me. But, that's just reality, so you take with the good with the bad. Earl, we'll go to you next.
Yeah, I mean, at first you learn to hate the HFTs, right? Because basically, I'm not going to speak for Pax, but he and I were talking about what we did. That's what we did. We were the original high frequency traders, right? We were making markets and we provided liquidity. So once you get over the fact that I love the pit, I love being there, I love the income, the friends, and the camaraderie, and basically the algos and the HFTs took the bulk of that over. You let that sting go away. You realize you still need the market. You need the liquidity. You need things to move. It's not that big of a problem. I like what Morad said too. Inherently, when I first heard about algos, you think of this wizard, quant group, like Harry Potter on in the background, and Terminator. Got this magic alchemy going on how to figure out the market. The reality is they're doing the same things that we're doing in the pit. They're just doing it at an incredible speed. I worked with some programs too, and even signals that I was doing, like more of a gray box approach. Anthony, you and I talked about this tons back in the day. You'd have things out there, a gray box approach, where if it gives a signal on the chart, you hand execute. One of the first things I noticed is that difference in speed, and that's really where the algos come in. Just even executing some of the things that I was doing, as I would see that and start to see it on the chart, the automated system that I had put together, and it wasn't that good, guys, but it was already in. It was before I could even start to process to think what doing, it was already in and working. So that speed is hard to compete with. As a human, you just have to change your time frame and come at the markets a different way.
Pax?
I don't know how I can build on what you guys had all said already. But, on the trading floor, we were market makers. I was a market maker. I was a big trader, all of it. I had to learn how to go from being a market maker to a market taker. And, the algorithms provide the liquidity that I need for price to get from A to B to C to D. On the floor, it was us. Now it's the algos. I had to like everybody else. You guys, all three of you mentioned, it's I had to stop fighting them and to learn to let them do the work for me. Algorithms and HFTs are not designed to take risk. We did. The traders assumed risk. We made markets, we moved markets, but we also assumed risk. Algorithms are designed to make money. HFTs and their algos are designed to make money, and that's it. Once I was able to kind of grasp that concept, I know that might seem simple to a lot of you guys, but once I was able to move from that mindset and to let the algorithms do the work for me, I became much more effective and much more consistent. And then I was able to learn how to size up and down. I keep going to that, but as a result of price, again, price.
Yep.
Can I say one thing real quick? Because I think it's an important point. Pax, you just hit on something that I think is incredible. We have to remember that whether it's other traders or the bulk, it's what the market in general is doing. Like you said, you love it when it's going your way. It's brutal when it's moving against you. The market isn't inherently good or bad or evil. It's none of these things. It's going to do what it's going to do. Right. And actually, you passed over that, but Pax, I think that's a very important part. Whether you're trading in the pit or trading on the screen, you have to understand it. Don't take it personally. The market's going to do what it's going to do. It's your job to take that information, and stick to your plan, but reverse. Know when you're wrong, get out and go with it. The sooner, sorry if I'm harping on that, I think that's so important psychologically. The sooner you realize that the market it's neutral. It's going to do what it's going to do. It's your job to find out how to go along with that and let it do the work for you.
That's excellent. It's a force of nature.
That's right.
Yes, and on that too, going back to the singer winger, which we all learned from Mickey Hoffman, at least. A scratch is as good as a winner. I scratch all my. If I buy 70 this morning, got long at 84 out of the opening range. If I buy 84s and they go offered, I'm out. I'm not waiting for the market to get to the bottom of the opening range. I buy 84s, I sell. A scratch is as good as a winner. That's letting the algorithms take me to where the algos are going. Not battling them. They also, the algos, the HFTs all know where our stops are too. They're going to go hunt for stops, and that's going to pull us into that ego-based trading, that emotional-based trading where now we're starting to click away. We're widening our stops. They're no longer scratches, and now a trade becomes an investment. And that's fighting the HFTs and the algorithms, and I can't do that.
Wait, you mean that doesn't work? Just get mad and keep clicking.
It doesn't.
This actually leads me to the next thing I think is, we're going to start with Morad on this, is to why so many pit traders that I know have chosen the path of using market and volume profile. Morad, you've seen this firsthand. You've had a lot of pit traders come to your groups. Why do you think that is the case?
I used to go down to the pit to watch Borsellino and many others trade, especially on bad days, just to get inspiration and keep myself in the game, keep my head in the game. And I think the idea behind market and volume profiling is it's an auction. Prices are bid up because somebody's seeing value in much higher prices. They're buying now to profit later. And the opposite for selling off. And, the market has traded in this area. I think when I was standing there in a pit, and again, I have a badge hanging on the wall here and all this stuff, never executed a single contract. I've been a member since 2003, something like that. I'm way behind you guys. But the guys in the pit, at least I'm being in a pit and hearing what's going on, you start to notice where the market's trading a lot, where it's kind of running through. And all volume and market profiling is doing is displaying that on a screen for you. It's not a trading system. It's just a way of organizing information. So I think it's an intuitive thing. Like if Pax has never seen a market profile in his life, it would literally take him 4 minutes to be like, oh yeah, this makes sense, because it's kind of like what you're doing in the pit, just hearing what brokers are doing, what prices get hands up in the air, what prices, get quiet. It's just being displayed on the screen in an organized way.
You guys have anything to add to that? I mean, I think he said that brilliantly. I keep it up on the side just to look at the profile, the volume profile all the time. And we talked about noise, is that when I see it's in the belly and I'm sitting there clicking away like a knucklehead, I know,
That's me today.
You just can see I'm trading in the belly, man, So I don't know about you guys. What do you guys think about it?
No, I like volume profile. It's effective. I look at when I was trading more, I look at the long-term daily profile, but also break it down into shorter-term profiles. I like a small profile and see how it's stacking up. The transition, why traders do it, I think you're ultimately always looking. We have the advantage of seeing an order. You'd see Merrill come in, I'm even bid on 1,000. Well, you knew not to sell into that, try to buy in front of it or buy with it. But the idea of price rejection, right? Prices, the market's only doing one of three things. It's going up, it's going down, or it's going sideways. How fast it does those things, that depends on the volatility of the day. How far it goes up, how far it goes down, when it goes sideways in the chop. It's all volatility based. So the realities are still the same. You see market profile, you see it over rotate from the belly, you see it go down, you see price rejection, I'm getting in. right? That's the market. That's what it does. It's an auction. Rotate it back to the middle, take off half your position, see if it over rotates. Does it break out of the rotation? If it does, follow it and go. Look for the next rotation up. It does this over and over and over again. It's what really moves the market. Price discovery. It's just that simple.
Pax.
What the hell? Why do you put me last? What the hell am I going to say to that?
You're the anchor. Do you even use market profile or volume profile at all, Pax?
Not anymore. And the reason I don't is because I started, instead of just setting the market in context, I would start to overly trade the rotations, and then that would take me out of my game. When I went on the screen full time, I had spent Pete Stoudemire had tried to bring market profile into the age of algorithms, and I think it was 2009, and I was one of two traders that traded this new add-on for him. It didn't work, and we shut it down pretty quickly. It was through Rosenthal. And so after that, though, I sat and listened to Pete talk, and he taught us for a few months. And I came away from every conversation with Pete Stoudemire more confused than what I was when I sat down. So when I stressed, he's such a smart man. It was way past me. So when I sat down on the screens, full time to try to make a living as a trader again in 2011, 12, 13, I had to simplify things, and that using the profile to put the market in the context is something I do almost inherently without thinking very much. It's just something that has become second nature.
Last question before we get to all of the questions, and we're going to start with you, Pax, because I know you're very sensitive and you don't like being last. He does. Look at him. He's kind of mopey now. I'm worried about him. All right. All right. So take your favorite story from the pit. Oh man, Pax. It could be a winning trade. Any just one of your favorite stories, I should say. It doesn't have to be your favorite.
Like a funny one or
yeah, I like the funny ones.
All right, I'll tell two. One my favorite story, one of my favorite trade, the best trade I ever made, also happened to be the biggest single loser. When I lost, most of you, I've told the story many times, when I lost $1.5 million in 30 seconds of my own money that I never dreamed of having 2 years previous to that, when the Fed did an emergency rate hike or rate cut. It was a rate cut, very first trading day of the year in 2003. I was the only asshole in the pit, and I was the only big trader in the pit, and I was the only big asshole short, like a schmuck. And that market rallied 650 full points. I learned it's my favorite trade because that's the day that I learned that the market can't hurt me. The market, like Earl was saying earlier, the market can't hurt me and it can't help me. It's neutral by nature. There's three things. We're going to do three things all the time: higher, lower, or nowhere. So increase my size, decrease my size, or not trade. That's it. I don't need 45 different, studies and indicators to be able to show me that, So that day that I lost that money, and the next day when I was in the pit, I was there after losing $1.5 million, and I made 200,000 the next day. After losing $1.5 million that day, that was my favorite trade because that set the rest of my career in motion and gave me the solid foundation. Now, another story is, there's so many different funny, crazy stories from Jay, when Jay's ever bit the guy's ear off in the S&P. That was, you remember that? Or when Spike went,
how can you forget that?
He was Mike Tyson before Mike Tyson was Mike Tyson. Or when Ike, remember Ike? I don't want to say his name because he's still around. Beat himself up when he gave himself a beating like I've never seen before in my life. If you remember, what I'm talking about, Mike Walsh, right? Yeah. From Spike. So if Mike stood like two people down from me, and if he got one more fight, he'd be suspended for 6 months or a year and fined $500,000 or $1 million. So he went out of the pit. He was going after Nico. He was peeling out of the pit, and we all jumped on him. And we're holding him and we're yelling at him. He's breathing smoke. He was like a mean guy. He was like a bully. He had smoke coming out of his nose like a bully and steam coming out of his ears like a cartoon character. And we calmed him down. Mike, don't do it. Don't do it. Okay, I'm all right. Then he just he's punching himself in the face. He's banging his head against the rail. It was the biggest beating I've ever seen anybody take in my entire life. perpetrated by himself. Oh my gosh, it was crazy.
Remember the axe and coin fights of them coming out of the office? It's like I'd be trading, and these guys would be punching each other, and I'm trying to get flat, and they'd be coming right by my desk, rolling on the floor. I'm like, what are you guys doing? And 5 minutes later, they'd be laughing.
I broke those fights up so often.
Going to the bar. Yeah.
Unbelievable. I mean, no one can even make it up. I mean, I literally hear them coming through from the lobby and Spike, and I was the first desk on the corner. They'd be punching each other, falling on the couch, and I'm sitting there clicking away. I mean, it was unbelievable. Earl, what was one of your favorite stories?
I got a new one now. This fighting story. In fairness to your boss, I stood next to Nico for years, and I love him. But during the day of standing next to Nico, tended to draw that reaction out of people. He really did. One of my favorite stories, I've told it before, you've heard it too, is when I first started out. Like you got to imagine when you walk into this world as a new guy, when you first see it, like Morad was saying, the pit's this incredible thing. It's really an honor and a treasure to have been there for as many years as we were, right, guys? But when I started out in the Eurodollar options pit, which was physically one of the largest pits in the world. And what was funny is the Eurodollar options would move in these herky-jerky flurries. There'd be all this activity around a number for 15 or 20 minutes, and it would be just absolutely dead still quiet, for hours at a time. And so the things that these types of personalities and these, guys do to keep themselves entertained is pretty funny. And one of the things was always, you remember the guy, like, drink the pickle jar, can you drink a whole pickle jar, eat a whole packet, a jar of mayonnaise. And people would place these massive bets on it. So there's a guy now that works for the CME. I won't say his name, but the quick of the story is you're just standing there like all these things start. You never want to bet against like traders, right? So quiet conversation, and the guy's talking about how much they can eat, and the guy says something about, my favorite snack as a hostess thing was a ho-ho. Oh, really? How many could you those eat? I could eat 2 dozen of them, no problem. And all of a sudden, that quiet voice from the back down, you want to bet? So before you know it, here you got 1,000 people, right? It starts out the Eurodollar pit. It's how many ho-hos can this kid eat in the market? Where's the under? Where's the over? I'm long 10s. I'm short at 20. No way this kid's going to eat 20 ho-hos. So anyway, they send some clerks down in yellow jackets, go buy all these ho-hos. And even the security guards are in on it because you're not supposed to have food on the floor, right? So here's this bastion of commerce, and the whole thing's shut down. There's literally a couple hundred guys standing in a circle around this kid to just start stuffing ho-hos in his mouth, So he starts ripping them open. He opens up. He's shoving them down. 1, 2, 3, 4. He's going like a madman, He gets up to about 9 or 10, and then he kind of stalls and spits some dry food out. And he says something about, can I have a glass of milk? And there's this whole side conversation about the legality of the bet. Are they going to let him drink milk or not drink milk? So he says, Jesus, let the poor kid drink some milk, So somebody runs to get some milk. He has some milk.
That is awesome.
And he keeps going. So he's getting there, and he's cramming them in. He's doing his best. And with each and every ho-ho that you get, somebody's cleared. Somebody's short 18. They're out. Oh, a roar. And the stakes are going up. So he's starting to slow down, and he's shaking, He's at like 21. 22. And he gets them in, and with each and every one, there's just this huge change of capital. I mean, I'm talking tens of thousands of dollars, right? So finally, he gets done, and the kid's about going to pass out, and that's it. The winning ticket's in, right? The guys are laughing, and then all of a sudden, he gets real quiet, and he gets still, and then everybody shuts up. They say, "Wait, I think he's going to puke." And now the market gets really interested again. And this is always important. Know where the real market is. So they're waiting and going because the big bet was the under or over on whether this kid was going to puke or not. So you got to love this fucking place. Where else in the world?
Unbelievable.
Right? You are such a great storyteller. That
was awesome. That was great. I mean, the only story, what I was thinking you were going to say, Pax, is when Elena punched Gino. We were running, and there was a little. Remember, we weren't allowed to go into the video room unless it was an out trade.
So I took all you guys in there,
and we're all trying to get in the video room to replay the punch, and we're watching it, and he's standing there. I'll never forget it. And all of a sudden, whack! I mean, it was unbelievable.
He set him up. It was a good punch. Oh, Elena set him up. It wasn't just a punch. He set him up. With a 1, 2, 3, 4, 5 punch combination, jab, right, uppercut, and then the haymaker from like way far below.
We were pausing it, rewinding it, and he had to come to work every day in the pit with a black eye for how long? It was just insane. I don't even know.
Elena just beat the shit out of him. That was
unbelievable.
the most watched. That was the most watched video in the history of Merc videos.
Not even for sure. It was great.
I wonder if it's out there. I wonder if it's on the net somewhere.
Nah, because we didn't have video phones then, and it was the only way to see it was, and they only, I don't know how, you had to go into the video room. And boy, I was in there a lot with Vince. I was in there way too many times. We're going to go to the questions that everyone sent. These are some great questions. We probably won't get to all of them. We only got a few minutes left. You guys are gracious with your time. We're going to run a little long today because I want to make sure I get to some of them. Greg Donahue. Greg, thank you for the question. He said, good afternoon, everyone. Thanks for doing this. Got a question. Do you think the learning curve for traders today is shorter or longer than it was in the pits? And we'll go around the horn, and we're going to try to make them relatively quick with the answers here. We'll start with you again, Pax. I know, Mr. Sensitive.
Oh, thanks. I think that, and this is from my own experience, I think it's longer. I think the learning curve now for a trader is longer. I think it's easier to break into the business. But I think it takes a longer period of time to learn how to not lose money, to learn how to break even, and then after you learn how to break even, to learn how to be profitable. So I think the learning curve is actually longer. But I think that the amount of money that you need to spend in order to learn how to do that is a lot more limited than what we had to on the floor.
Earl?
I would agree totally with Pax. I think it's a lot longer now. It was much harder to get in the business, but once you were there, you had the advantage. How I learned how to trade is I was dumb enough to know better and smart enough to say, hey, who's the best trader? You brought him up earlier. You'd ask 4 or 5 people and get consensus. The advantage that you had in the pit,
right?
There was no little league. You were instantly there in the majors. So you learned right away to keep your mouth shut. But the advantage I had is I said, who's the best traders? And they gave me 3 guys. And the guy I watched that was easiest was Praz. Every time he put his hands up, I put my hands up too. I didn't know what I was doing, but if he was even bid on 100, I was even bid on 1, and that's what we did. I think it's a longer learning curve now. I think if the structure was different, you could get in and sit next to somebody, it would probably be similar. But I think it's also a lot easier to get into the business now. I would agree with Pax totally.
Morad?
I was never in the pit trading, but I was there watching these guys trade, you guys. And I got to say, having dealt with a lot of people trying to trade electronically, it's definitely a lot longer. And one advantage I had trading in a prop shop or with a group, these guys, Pax and Earl and you are accountable to someone. The biggest problem that exists today for online traders is that you could just BS your way out of every stupid thing you do on the screen. There's no accountability. Yep. There's just no accountability to open a micros account and trading it and doing silly things and scalping in the middle of the day. Back then, you're trading someone else's money. Earl had 10 grand, Pax, I don't know how much it was, but you had to answer to somebody. You borrowed the money like you did, Anthony, you had to answer to somebody, you had to perform. Now it's just like it's kind of like a video game. People take it as a video game, but you'll lose your money. And I think that's what makes it long. Also, you couldn't look around. There are many, many advantages to being in a pit. You could hear it, like you guys say, you could hear how loud it got, and it got your attention. Now you're kind of in a vacuum. You're watching ticks on a screen. And it makes it harder. So I always tell people, try to find an accountability partner. Try not to trade on your own. That's a very, very important piece.
For me, I'll keep it real short and sweet and simple. I think the biggest reason why I agree with you guys and why it's longer now is because of the mindset of people nowadays. Everybody wants everything today. Nobody wants to plan for a longer term commitment to anything. And when you open up a trading account, you think that instantly makes you a trader. But it doesn't. It takes a long time. It's a lifetime commitment. So that's why I think it takes longer, because it really should be a lot shorter. This is a question that we answered. I'm just going to talk about it real quick. Is did you all have to find a new style going from pit to screen? I'm sure you all just traded price movement in the pit. How do you trade in the screen the same way, or was there a major adjustment? We'll just go to Pax and Earl here. I think you guys answered this, but you want to just maybe comment on it real quick. Pax?
I trade much the same way that I did when I was at my best on the floor. I trade from the opening range every morning, and I trade from that to targets. In the S&P 4187 above to 4220 to 4265 to 4292. So if I'm long from the opening range, that's why I'm taking profit at. I'm not going to trade anywhere other than those prices, period. And if I find myself trading anywhere between the opening range and 4187 or 4220 or 4265, I know I'm losing money. And so that's, I don't trade in the middle. I don't mess around with it. So, I mean, and one of the major things one of the major components for my success in my career is sticking to my process and not veering from it. But my process is not effective in every market 100% of the times, but I do know it, and I know that it's going to always protect me, and it will give me some of the upside that the market has for me. So I don't know if that answers it or not. I think I got a little off base, but I don't worry about time. I don't worry about volume. I just trade price.
Earl.
Yeah, the quick answer is, you have to train your style a little. One of the cues and the things that we did fluidly in the pit is you would just spread out your bid and ask you were more flexible to the activity in the pit. You weren't always as tight. If you were even bid at a half when it was slow, you were even bid at 1 even or even bid at 2 even, if the market opened up. And if it got really crazy, like on a flash crash day, you're even bid at 20, you'd open those markets up. I think it's easy to get static if you're not careful on a screen. You need to adjust to the volatility. If you have something that works in the morning for an hour, it probably won't work at noon. So, but you do have the ability to switch that. So that's probably the biggest thing.
Last question for today. Rob, how important is having a routine before you trade, whether chart review or mental routine? This time we'll start with Morad.
It's everything. In my opinion, I think having your process, I do this Trader Bite every morning at 8 a.m. Central, 9 Eastern, and those who've been watching it, we're at episode 2122 or something. If they go back to episode 1, they'll see me doing the exact same thing. In fact, if that routine is interrupted, I actually step back on the open and give myself time to figure out what's going on and get back into the routine. The process is everything.
Pax?
My morning routine and my afternoon routine is 100% right. The first step in me deciding what sort of size I'm going to trade for the day is made at 5 in the morning, or maybe not 5 in the morning, but through the morning, whether I discover whether or not I'm confident, carefree, fearless, and focused. And if I know that I could be those things, then I know that I can increase my size a little bit. But no, my morning routine is absolutely integral to my trading. And if for some reason I'm not feeling well, I don't sleep well, or I don't go through it, I'm either going to cut my size or not trade.
Earl.
Yeah, I like what Pax just said. It's not just the morning routine, it's a general approach to the market. You want to be serious about this. Like when we were there in Pax, you were a super successful trader. People always say, hey, get me down there. I want to come down. I want to trade. And the reality is I would tell new guys that would come into work for me, either as clerks or guys that I backed in the pit or worked with, if your lifestyle is where you're out at, we all go and we all party. But the point is, if you have a girlfriend that's calling you constantly 15 times a day, or you've got friends, that want to stay out until 3, 4 at night, that's all fine and good. But you have to make some choices in life. You need to approach it and be serious in your routine as a business. You need to approach it with that discipline Monday through Friday. A routine is very important, but it's important to stay on that in a lifestyle and choose. You're here to work. It's not a game.
Yeah, I'll leave it with this final comment on this for me is everybody talks about being patient. Everybody talks about being disciplined, but if you don't have a routine to set that in place, I don't know what I'm patient or disciplined to. I'm lost. The routine sets the tone for everything for me. It's the most important part of my day, trading or not trading. My routine is everything. I can tell you what I'm going to do, weeks ahead, because it's just very important to me. Guys, I don't know what to say. I mean, how much I look up to all of you guys. You guys have all helped me out in so many different ways over the years. I just can't thank you enough for today's conversation. I had so much fun, and I just really appreciate all of your time. And let everybody know where they can learn more about you guys. We'll go around the horn again. We'll go with you, Pax.
On Twitter, PaxTrader777 on Twitter. My website is www.thepaxgroup.org. And, I don't know, Pax Group on YouTube.
He's not even sure. Well, Earl, I know that are you on social media, Earl?
No. Anybody get a hold of Deli? He's got my phone. I'd love to talk to anybody with share a beer and a story, but these are the professionals here. I just got stories from the past. I will give a shout out to Morad though. I've worked with his company in the past, Edge Pro, the guys that he has working for him, the first rate in the business. We've had the pleasure of being exposed to plenty of people over the years. I really look up to what he's doing. He's a trustable guy. He's got a proven track record. His program, the pieces he's doing are fantastic. So you can't go wrong with anybody here, especially today that's on Deli's show.
Thanks.
Yeah, let me echo that real quick. EdgeClear is I have not. I mean, honestly, I have never seen a brokerage that actually cares about seeing their traders succeed as I have with Max and Ian and Morad. And it starts with you, Morad. I mean, it's top down. I mean, really, I commend you guys on the business that you're building. Anytime anybody asks me about where to open accounts from, I always, without fail, suggest that they open up with EdgeClear.
Agree.
Really appreciate that, guys. And by the way, it has nothing to do with me. It's the team over here. These guys amaze me all the time. They're fantastic. They're traders. They understand traders' problems and issues, and it's just an incredible team. I'm very proud of them. I appreciate the good
boys,
words.
Ian, Max, Giancarlo, Nathan. Who am I forgetting?
Yeah,
these are my drinking buddies. So
that's the main part of the team, and there are people off site.
Yeah. Morad, real quick, tell everybody. Obviously, you can go to edgeclear.com/Deli and just tell everybody what that promo we're running for everyone listening to today.
Yeah,
is.
so we have a special pricing promo. You just have to go to edgeclear.com/Deli, go down to the middle of the page. It'll show you that there's a discounted rate, commission rate for anybody that's using the Deli promo, including for micros. We want to also invite you to sign up for May's giveaway. It's going to be a really good one. You can do that again on that same page. So no questions asked. If you tell us you came in through the Deli show, through the Futures Radio show, and through Anthony Cordelli or Pax even, or Earl, just let the broker know no questions asked. You'll get that deal. So that's what we're offering.
My brothers, great having you guys. Everybody that tuned in today, thank you so much. Like I mentioned, this is recorded. It will be on here. If you enjoyed it, give us the thumbs up on YouTube. Never miss an episode. And click that subscribe button right here on YouTube. This will also be available on audio, so iTunes, Spotify, wherever you listen to podcasts these days. There's so many places, I'm pretty sure. And all those places, if I'm not, let me know, and I'll make sure that I get it on there. And thank you guys all. Thank you, everybody, for tuning in today. I will see you guys next week.
Thanks for having us.
See you guys.
What you do, kid, is unbelievable. This is a place where all traders can come and learn. So thank you for all of the videos and all the work and all the content you put out, my brother.
Thank you,
Absolutely. Guys. Second that. I don't even know why I'm here, but thank you for having me on. It was an honor to be here, Deli. You're doing a great
we had a blast. I haven't laughed this hard in a while. I needed it after the way I've been trading. I'll see everybody next week. I'm out.
See you guys.
Thank you for listening to Futures Radio Show. If you enjoyed the show, please leave a 5-star review on iTunes. Never miss an episode. Go to anthonycrudelli.com and get on our email list for show notifications and for free content that is exclusively for subscribers. Also on anthonycrudelli.com, you will find tons of videos and education on trading futures, options, and crypto. Past performance is not indicative of future results. Opinions expressed are solely my own and my guests, and they do not express the views or opinions of my sponsors. Futures Radio Show is produced by Crudelli Productions.